Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Thursday, February 8th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Big picture, and we'll work our way into the day itself, of course. Just a reminder that it was about, 6 or 7 weeks ago that we tested the channel top at 258.13. This is a weekly chart. The channel top stems from the July high of last year. So full 6-7 month channel structure. Once we tested the 258.13 channel top, then in the mid to upper 260s, as I recall, we were mentioning how you should plan for the possibility of the channel bottom, which is also dropping weekly this week at 173.28. We did test this area this week. We tested the 177 and a quarter 5/8 downside Fibonacci from the July high against the preceding January low. That was tested on the daily chart. I could show that, I believe. You can see here we came very close to testing the 173.51 descending channel top on the daily chart, 173.28 on the weekly. So we have tested it, and following the testing of that channel support, presently at 173.28, now I can talk the inverse, which is to say you should allow for the upper 250s and dropping weekly as a realistic 2 to 3 month possibility. We don't have a clear signal for that on strength, but you can bottom pick the low to mid 170s, low to upper 170s, in anticipation of the upper 250s and descending on a gradual basis over the next 3 to 5 months or sooner. And the sooner would come with a settlement in the coming weeks above 214.60, which is a new descending 1/3 speed line, trend defining in its own right. And I say new because it's based in part on Monday's low. And that was the lowest the market had been in many months following the July high. And so, yes, bottom picking 173.51 in anticipation of 214.60 over the next 3 to 5 weeks. And over the next 3 to 5 months, I don't have it labeled, but the channel top, at least on the weekly chart, is once again at 258.13. And that is the big picture. There really is no good reason to be short right now in Tesla if your time horizon, is anywhere from, 3 to 5 weeks out to 3 to 5 months, because over both of those time frames, I'm expecting 214.60 within 3 to 5 weeks, and once again, the 250s in reach over the next 3 to 5 months. Now, I think if you're a short-term trader, a 3 to 5 day swing trader, a day trader, for instance, you can consider going short at 191.30. But just recognize that we are fresh off of a long-term support region, and this market is poised for 214.60 by the end of March or sooner. And that sooner would come with a settlement today above 191.30, by the way. If you've not bought the market on its testing of long-term support this week, your next opportunity, I should say not opportunity so much as your next signal to do so on strength, would be a settlement today above 191.30. And then I think inside of 2 weeks, we should reach that 214.60 3 to 5 week objective, where we could top out by that point in time through March, fall back into the low 170s again within 3 to 5 weeks. As I've been saying, we could trade inside of this wedge for the next 2 to 3 months, possibly. And once again, it would be a settlement above 214.60 over the coming weeks that would then give a green light for testing, I should say retesting, the 258.13 channel top. And that pretty much summarizes the upside. Let's talk about the day itself. 191.30, solid day resistance for day traders, and 3 to 5 day swing traders can have a go. I would like to see the market close negative on the day following a test of 191.30. So if you want to hold the short position overnight through Friday into next week, anticipating then the possibility of bearish rotation back to 173.51, my recommendation is if you sell 191.30, let's have the market close negative on the day, which would be below the 187. I don't know if that's the official close. We tend to print these charts out within 30 to 90 seconds of the closing bell, so we can get right to it and get you your information early rather than later. So 191.30, able to contain session strength possibly into next week, and once tested, the market susceptible to falling back to 173.51 within 3 to 5 days. I would not call 173.51 a signal following a test of 191.30. I put into context, obviously, the fact that we're just coming off of long-term support. So if we happen to push or open today above 191.30, I see 197.81 as a likely intraday objective. That may well contain buying through the rest of the day. That is a new descending 1/3 speed line that's based off the December high against Monday's low. It can contain intraday buying pressures, but I will say, and by a degree, that it's a close above 191.30 that signals 214.60. In other situations, I might consider it 197.81, but I'm taking the first textbook buy signal following the test of 173.51, and that happens to be a settlement today above 191.30. So bottom line, I would not be short overnight or into next week if we close today above 191.30. Downside today, there's lots of carefully chosen minor points, all of which can contain ample intraday activity. But it really is 181.06 that I think is the downward pivot point into later day. 181.06, nothing more than the low settlement price that was put out on Monday. And if we happen to break 181.06, we can fall into the 173.28 to 177.25 region again today, where once again we can bottom out through March trade, possibly through the second quarter, and above which 258.13 is calling, so to speak, drawing the market like a magnet. Not necessarily expecting it, but wouldn't be surprised to see it over the next few months. You can prepare for it. You could reach for 250 or 255 strike out of the money calls that don't expire for at least 6 months. Or perhaps you could reach for 210, 215 strike out of the money calls that don't expire for at least a couple of months. This is a 3 to 5 week target. That is the upside. Let's talk downside. I don't expect to see that tomorrow, Friday, but if we did close the week below 173.28, it would need to be by a full 1% margin, and that is at 171.54 or lower. So if we settle tomorrow, Friday, the week itself, 171.54 or lower, all those out of the money calls you may have purchased should be liquidated, in my opinion, and you should then consider reaching for 102 strike out of the money puts that don't expire for at least 6 months. This could be a continued bloodletting like we've seen following the December high. So this could be inside of, 4 to 6 weeks perhaps. In fact, I think it is likely it would be that way. But it could also take the better part of 2 months. So the expiration, I would go out at least 4 months on those 102 strike out of the money puts. And this, of course, is the scenario, once again, where we close the week at or below 171.54, which is the 1% violation of 173.28. I think I've rounded it out. Please click like, share, subscribe. Check out wickedstocks.com. We put out a stock pick this week so far in Alibaba. We're going to put out another one on Thursday. You can see them all for free. No cost to you whatsoever. 5-day free trial. If you don't like what you see, you can buy it at no cost to you whatsoever. We also put out solid daily SPY and daily triple Q analysis. The SPY is presently poised for longer-term bullish continuation. We give you exact conditions for that broad market index as we move into later year. It hasn't happened yet, and we give you the exact conditions in which that can happen. I'm going to leave it at that for Thursday's Tesla report. I'll be back, of course, tomorrow with Fridays. You have a great evening.